Hey guys, it's Kevin here at Watchhimtrade.com. It is Sunday evening, about 7 p.m., July 19th, 2015. I wanted to talk about something that I do every Sunday night, and that is putting in low ball orders and what the purpose of doing this is and what I hope to accomplish. So, a low ball order, first of all, is an order that I consider unrealistic to get filled. And it's an order that if it did fill, I would feel really good about the fill and feel like I have very low risk. It's not a lotto ticket because it's something that if it fills, I actually think it's going to work. But it's a lotto ticket in the sense that it's not likely to actually get filled. Very far probability type stuff. So with that said, I want to talk about some orders that I have placed here, and then afterwards I'll talk about why I do this on a Sunday night as opposed to just waiting until the middle of the week to see. So the first one that I have, and you can see my order list right here, is to sell an Apple 120 put this week for $1. So I want to sell a 120 put for $1. I would collect $100 for that, and I would just be naked short the put. Apple has earnings this week. The only reason these 120 puts aren't going for 5 cents is because of earnings and because of the implied volatility that comes with that. If earnings weren't this week, there would be no value on these 120 puts right now. But since we do have earnings, hey, market's looking for some protection to the downside if it does go down big. So I don't want to sell it at 46 cents because not that great. But if I could sell them for $1, I'll take it. So Apple would have to come down, probably into the 128, 127 range in order to get these up over 100%. But again, if Apple goes down and I can fill those 120 puts short at $1 and collect $100 on that and take that premium, I'll take it. I'll be willing to bet that Apple stays above 120 here through earnings, especially given what Google just was able to accomplish. So that's my first one. Second order is on Priceline, and I want to start looking at Priceline call spreads as Google made that big move, and I think Priceline is best positioned to make a similar move to Google. So the trade I want to make is I want to buy the 1300 by 1330 strike call spread for August 14th expiration. That's the week of earnings in Priceline. I want to buy that for $1.50. And that would give me upside of $30, the difference between the two strikes, 1330 minus 1300, while only having to risk $150. Right now, if I wanted to buy the August 14th 1300 strike call, I'd have to pay $13 a contract. If I wanted to buy the 1330, I'd have to pay $8 a contract. But if I use a spread, I can minimize that cost while reducing some of my reward as well. So right now, this spread is going for what, $8 on a 1330, 1355. It's going for about $5 or so. This 1330 by 1330 call spread going for $5 to $6. So it would cost me $500 to $600 to buy it right now. And again, this is a situation where I need Priceline to come down pretty dramatically. Actually, might end up raising this to $2 or $2.50 depending on how the week progresses. But if I could fill this 1300 by 1330 call spread for $1.50, hey, I would love that fill. I would love that risk, paying $150 for potential $30 upside in this trade. So that's another low ball order that I'm looking at to try and fill. Another order here is on Amazon. A couple different orders on Amazon. Amazon has earnings this week, and she's another one. You look at these 385 puts, the stock's up at 485. These 385 puts are going for 36 cents. I don't want to sell them at 36 cents, but if I could sell one of them at $1, the 385 put, if I could sell it for $1, number one, I think these expire worthless, but I'm not going to chance it for only $36. But I'd chance it for $100 profit. If I sell it for $1, I'm collecting $100. That's a trade I would really, really like. All right, and I would just be willing to be naked short that 385 put. The other trade idea for Amazon is shorting a 380 by or the 380 by 390 vertical put spread, shorting a put spread for 40 cents. Another one that I don't think is going to fill, only has a 7-cent difference between the spread right now. So I need Amazon to come down. All of these trades, I'm betting on the long side, and I need the stocks to come down in order to have any shot at filling, and I need the stocks to actually come down quite a bit early in the week. Lastly, I have a open order on Tesla to, again, short a put spread for August 14th, as Tesla has earnings the first week of August, and the only reason those puts have any value to them is because of the implied volatility associated with this upcoming earnings report. So basically what I want to do, I want to short the 215 by 200 strike put spread for $1.95. It's actually a ratio spread, as I would be selling 2 naked and only going long 1 of the 200 strike puts. Just a different type of spread order. But the bottom line is I want to go long Tesla using spreads, and I need the stock to come down this week in order for this order to have any shot at filling. And again, I don't see Tesla going below 215 over the next 3 weeks, regardless of what earnings is. So this would be, to me, a very high probability trade. So all these trades, I think, what's the chances they fill? Very, very low. What are the chances that if they do fill, they end up to be profitable trades? Very, very, very high. That's why I do this on Sunday night. Why do I do it, right now instead of, say, waiting to see if Tesla drops this week, right? Hey, Tesla's at 275. You say, hey, well, you're placing these orders on Sunday. If Tesla drops 20 points tomorrow and you fill, you might actually be able to get a better entry point on Tuesday. So why are you placing the order now instead of waiting to see if Tesla does indeed drop? Well, here's the thing. If Tesla actually does drop and my order's not in, I might end up scared, right? How many times do we talk about a good trade, and then when we actually have the potential to make it, now we don't make it anymore? Because all of a sudden, push comes to shove and our emotions take over, and now the trade we thought was a good idea when it just sounded good in theory, now we don't actually do it when we have a real chance to do it. I can tell you guys, in my chat room, some of you chat room members who are watching this, you might feel kind of ashamed right now, because last week we were talking about Apple, and Apple was in the middle of a big drop, and I stepped in and sold some puts for December, and it was a good trade, and I anticipate that it's going to continue to be a good trade. So this is this move right here. Apple went from 124 down to 119 on July 9th, and when Apple was down here around 120, the next week's 115 puts and 114 puts were going for like 75 cents. They were going for $1. I mean, it was just huge premium jack up. You could have collected a ton of premium by shorting puts on Apple. And I asked people, when Apple was around 123 or so, I asked people, hey, if Apple went to 118 next week, who would get long? And everybody was like, oh, I'd buy Apple at 118. And the point is that when Apple was up here around 124, you could, this was July 9th, you could have been selling the next week's puts, the next week's 119 puts for like 75 cents, essentially getting you long Apple at 118.25. And I mentioned this idea around 124 and said, hey, that's going to be a sweet trade. But then what happened is Apple then dropped another 5 points, got down to 119, and everybody who said they'd be buying it at 118, now they weren't sure, right? They changed their minds and they got scared. So very few people I know actually went long Apple down here. They waited for it to recover. Well, guess what? By the time it recovers, the trade I made was already a 50% gain. Okay, so that's why I place these orders on a Sunday night when the market is closed, because it forces it doesn't let me get my emotions involved. Granted, I could always cancel the order, but the hard part is done. The hard part is placing the order and letting it fill. That's the decision. That's where the hesitation can come from. Hesitation comes from when you haven't yet placed the order. I've already placed the order, so now the only thing that can hold me back is A, the orders don't fill because, I don't get the moves that I need in order to have them fill, or B, once they look like they're gonna fill, then I cancel the order, which ideally I won't be doing. I won't be that much of a little bitch. But point being, you put these order in on a Sunday night, you eliminate some of the emotional aspect that comes with trading in the heat of the moment when you see the stock down big or you see it up big, and you know that, hey, a few days ago you said you were going to short it if it went crazy to the upside, you said you were going to go long if it went crazy to the upside, and then it happens and now you're backing out. You're not doing what you say you're going to do. So put these orders in on Sunday night and good things can happen if they do fill. Notice every single order I placed was a very low risk trade. I judge risk by money potential losses. Okay, so didn't have any potential losses of greater than $150 to $200 in this trade, except in the extremely rare case that a naked put would fill on an Apple or an Amazon, and then those stocks would then go on to drop 10%, which, if they did something like that, 20% in the case of Amazon, if they did something like that and I end up losing money that way, then hey, shame on me. The market got the best of me that day. I can live with that. So try this strategy out, review your trade ideas, put some notes down, say, hey, this doesn't seem like I can actually fill it, but if it can, I'd feel really good about it. And who knows, maybe you get filled and maybe some good things happen.